Oops, she did it again. It looks like that the housing correction has become a wee bit toxic for stars like Britney Spears. We'll talk about that and more. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, putting the realism back in real estate. Today is the 8th of March. Everything's just chugging along here. I haven't done a video for a while. The reason being, number one, I am so busy, it's ridiculous now. Things are happening, and quite frankly, you know what? I'm tired of doing these videos. Why? Because for me, the market's already changing, stuff's already happening, we're engaging it, we're working through it right now. It's only going to get worse or better, depending on your perspective. And by the way, you want to jump in and see what I do and figure out the distressed properties in your area, go to gethousingdata.com. That's gethousingdata.com. That's who this video is brought to you by. It's my affiliate link with foreclosure.com. You can check out the distressed property listings in your neighborhood at any given time. I look at that data every single day. Now, interesting enough here, so we have people who buy and sell homes, whether it's to live, to relocate, to fix and flip, to just buy and sell to make money. They figure they could take advantage of the market, etc. Well, a lot of wealthy stars, obviously in different parts of the country, New York, California, whatever, buy and sell properties. We know that. Well, apparently Miss Britney Spears is taking a $1.7 million loss on her I always can never say this word right. Looks like Calabasas house she bought less than a year ago. Now, with respect to the housing correction and or housing crash that's coming, depending on your opinion and where this is going to go, there's certain, I guess you could say, elements or parts of the real estate market that typically take it on the chin first and really show the signs of when the market's changing. For me, it's two things. It's land. So vacant land typically loses a lot of value right away because there's nothing there but vacant land, and there's no utility at this point in time on it. Now, also the high-end homes. So we see, and again, this is, I guess you could say, supported by information we see every month from NAR, National Association of Realtors. When we do the existing home sales, we see that the $1 million and above segment is losing sales, or has the least amount of sales on a massive level year over year. So that's what gets hurt. So poor Brittany here, she sold her home for $10.1 million a mere 8 months after buying it. So again, don't know what's going on in her life. Clearly she's had a little bit of troubled history back and forth in the news here and there. I don't particularly care what she does. Not a fan, but interesting to see that she purchased her home, $11.8 million last summer after getting married. And basically, this was, of course, I guess the point here is saying this is without court oversight. So I guess that whatever conservatorship she was in, I guess that was over. Basically, she bought this home without having to ask approval. So, and she sold it for 10.8. So she's, or whatever the number is. She 10.1. So she lost $1.7 million on this. Now, I'm sure she's got money to burn. There's no doubt about that. But the point is, no one likes to lose in real estate, and that's a pretty big nut to lose there. It's about a 10% loss if you think about it, just under that. So luxury home sales fell 38.1% year over year during the 3 months ending with November 30th last year, said Redfin. That's the biggest decline since 2012. So where are we at today? We have higher interest rates. We have a lot of pressure on the economy. We have a recession that's either here or looming, depending on your perspective. We have, gas prices, commodity prices, food prices. Everything is being stretched to the limit right now. People are having a hard time. But again, interest rates are still fairly high. We had a little bit of a couple-week reprieve earlier in January, but that's changed as they're back up again. So, when you're looking at $10 million plus homes and say you're going to get financing, interest rate changes certainly make a difference in your monthly payments. Now, again, this is $10 million home is a different strata for the average person. So who knows what's going on behind the scenes. But the point, these are the properties that take it on the chin, that feel it first with respect to the housing crash or crisis. Now, interesting enough here, the other day, Jerome Powell, the chairman of the Federal Reserve, basically says no decision has been made on potential size of interest rate hike in March. Well, the policy is not on a preset course, so he says, but ultimately in the end, when you take a look at the information here, is that, they're going to continue to raise things. So, a lot of the analysts and economists and really people were hoping that the Fed would stop raising interest rates, that it would remain static, and maybe we'd actually see a decrease. Well, contrary to what everyone wants to have happen, basically the Fed's saying, he surprised the markets when he opened the door to a possibility of accelerating the pace of interest rate hikes to 50 basis points increase at the March meeting. So again, end of the year, people are talking about plateauing, static, even a drop. Well, guess what? Now he's talking about, well, the people, analysts, whatever, hopers, or people are praying for that, I guess. But what this guy's saying here, the actual chairman of the Federal Reserve, is saying that's not the case. That would reverse the Fed's strategy to raise its policy interest rates in quarter percentage point increments, which they said they were going to do. Officials have backed this policy as the best way to probe how high rates need to go without causing too much damage to the economy. Well, I think the damage has already been done. It's only going to get worse. Powell also said the Fed is prepared to raise interest rates higher than previously estimated due to strong economic data and inflation readings. So inflation is still going up. We're still seeing a lot of those yield curve changes, and all the signs are pointing to a recession. Again, the definition of recession, I think it's already been met, but the definition changes. So I'm not an economist. I'm just reading stuff out there. But we all kind of know what's happening in the industry. So clearly, if interest rates aren't going down, housing prices are going to have to go down to accommodate for the affordability issues and the higher cost of borrowing money. So if you want to sell, you better figure out how you want to do it and whether it makes sense to even do it at all. That's going to affect the market for quite some time. So 2023 is not, as I said, we had a small decrease in mortgage rates, in January, and people were already saying, oh, the worst is over, blah, blah, blah. Well, the market is fickle. The people are fickle. We all work to our own narrative and to our own ends. And again, here we go. So the very next month, or the month and a half afterwards, the Fed is basically saying, oh, we'll still raise rates, and we might do it even more aggressively than earlier thought to curb inflation and to bring everything back to a reasonable point as far as they're concerned. So, you know what? Don't be surprised at what happens this year. Now, everybody, I appreciate you guys checking out my videos, and if you like the information I provide and understand where I'm going with this, if you would be so kind to subscribe, I'd really appreciate that. And also, if you're a current subscriber, if you could like and resubscribe the videos. Just the reason being, as I always say, I keep losing subscribers. I've basically put some on, put some off. I've plateaued for the past couple of years. It is what it is. We know what's going on behind the scenes. So thank you very much for everybody watching, by the way. And again, Powell seeks higher peak for interest rates. So Jerome Powell said the Federal Reserve is likely to lift interest rates higher, potentially faster than previously anticipated, with inflation persisting, an unexpectedly aggressive posture following last month's step down in the pace of hikes. So again, this is what's so difficult about the real estate market. Nobody has a crystal ball, all right? And that's the way it goes. But we have history of a past housing crash. We have a history of a complete real estate boom to bust cycle and recovery, so we can kind of predict what's going on. So if you're interested in real estate, you should be paying attention to what's happening and watching the market closely to figure out when you want to make your move to either buy an investment property, sell your home, buy your primary residence, whatever. So there are deals to be had out there. I can tell you, because we are the proverbial feet in the street. We see exactly what goes on in the marketplace. We see it before it gets discussed and figured out and put into statistics like, existing home sales price stuff with NAR and the Case-Shiller stuff. Remember, these are all things that are happening 30, 60, 90 days, after the fact. And we're seeing it, we see it all in real time and live in real time. So that's sort of what goes on. So I'm very happy of where the market's going, because I know where it's headed, and it's happening, guys. It really is happening. All the stuff I've talked about the past couple of years, and we see it, and we're actually working in it, and we're getting deals done. So you need to connect with me if you want to talk about that. So this was an interesting chart. It's the pandemic market correction is told by three home price charts. Ultimately, this was in reference to the Case-Shiller that we talked about that was released at the end of February. So if you want to talk about these three charts here, U.S. home prices are falling for the first time since 2012. So 2012 was basically our trough. If you recall, some of the Case-Shiller information that I produce on a monthly basis, our peak, so the first housing bubble peak was 2006. The trough, the absolute lowest in Case-Shiller was, I think it was July 2012. So that was the trough. And then it's basically been an increase in growth mode, obviously since that point in time. And we all know that home price appreciation has far outpaced wage growth appreciation. And also that the market's been manipulated. So if you really want to get into what goes on, I can tell you that a lot of the foreclosures, were prevented from hitting the market, which, made, the market a little more scarce, which allowed for home price appreciation to to move a little quickly. And there's still market manipulation going on even as we speak today. That's why things are where they're at. But interesting enough, it only can go on for so long. Now the Fed's participating with higher interest rates, so we're seeing stuff actually go to the red now. So obviously the the red before is 2007, 2012. Now we're seeing the red in 2022 going forward. So look forward to a slow burn of house price depreciation on across the board. Obviously, various markets will have depreciation or declining values going on at different paces, depending on where they started from and where they're going to end up. So this is the second chart they want to talk about here. It's the monthly shift in U.S. home prices. So you can see the green is the growth. Obviously, the darker the shading, the more extreme the growth or the decline. You can see the 2006, 7, 8, 9, 10, 11 area where you've got primarily very light green but primarily decline, and on a monthly basis. So when you're looking at 1% per month, 9.9%, 1.2%, 1.4%, 1.6%. So adding all that up, the national across the board, we lost 27.5% from the 2006 peak to the 2012 trough. That's where we were with Case-Shiller. You can see in 2022, starting in July, we started to see some monthly reductions there. So it's not like this just happened in 2023. It's slowly been going on. We had 0.3% in July, 0.9, 0.8 loss, 0.2, 0.3, 0.4. So we'll start to see that pick up again. And, in 2023, we'll probably see, much of the months in the sort of pink or orangey color here. So don't be surprised about that. Don't be surprised, where this market goes. All right, third chart here, pandemic housing boom gains deflated a bit in the second half of 2022. So when you take a look at, this is like your top cities across the board. You've got, between March 2020 and May 2022, for example, San Francisco home prices peaked almost 42%, but the 12.3% drop in the home prices between May 20 and 2022, May 2022 and November 2022 erased some of those gains. So we had, over 2 years of gains, but now we're seeing a quicker decline in value. So March 2020 to May, 2022, that's 26 months where we had almost a 42% increase, yet we're seeing a 12% decrease literally in May, June, July, September, October, so in about 6 months. So we can see that the pace is, I think, moving a little faster on the decline side, which it typically does. You can take a look at that chart there, basically the lost pandemic housing boom price gains, and then the remaining pandemic boom price gains that are there. So every month it's a year-over-year decrease. We can see various locations, obviously West Coast locations. So you got LA, Vegas, Phoenix, San Diego, Seattle, San Francisco are seeing the quicker declines and the steeper declines in value. So other locations will keep up or catch up, I could say. This will be metro dependent. So yeah, you could be sitting, and I want to clarify this too. Whenever I say something, somebody's always been smart enough to say, well, not in my area, in my subdivision, or in my little town, we've got no inventory and we're still increasing in prices. Yeah, because you're going to see, various areas, and if you want to get to the micro neighborhoods, sure, everyone can show growth, et cetera, and maybe in your direct backyard, you're still seeing home price appreciation. But on a across the board national level and on a metro level, you can see that a lot of these locations who've had huge appreciation are starting to come back down to earth now. Simple as that. This will increase. This will always increase as time goes on this year and next year. And as I always mention, this is just based on interest rates, inventory, the market, economy, inflation, whatever. Nobody talks about my favorite word, which is foreclosure. Foreclosures are increasing. There's more auctions, there's more filing, there's more activity. My short sale business has increased dramatically the past 2 months. We've got a lot on the go. We're seeing everything that's happening out there right now. So I can't keep up, which is a good thing to have. Of course, I'm not complaining. But the point is, this is actually happening, and that part of the business is not factored into all the analysts and where they think the market's going, or how much the market's going to decline. Simple as that, right? Nobody wants to basically roll the dice and stick their neck out, but I've been doing it for a couple of years. So opportunities for you, obviously I've gone through this chart a few times. There's lots you can do to participate in a declining downturn market. as we say, dominate the downturn. Lots are going on here. A lot of people are having problems. Homeowners now starting to realize, going, geez, I should have sold 6 months ago. Gee, when I had that offer, I had my hand out, and I was greedy, and I was waiting for my options, and now they're losing their options and going to foreclosure sale with nothing. So you have to understand that the markets do change, and this time it's changing a little bit faster than was anticipated. So keep that in mind. As far as what I'm doing in my business, inquire. I'm looking for, well, I can help you with new construction. Those are great deals there. Existing MLS properties, things for sale, investment opportunities, whether it's cash flow, Airbnb, fix and flip type things within the single family realm. Also multifamily. I have multifamily deals I'm looking at as well too. We can do some build to rent, flip land. I just met a gentleman a couple of days ago who in Southwest Florida, has 700 lots that he owns, and he's looking to sell some of these things. So a lot of, buying land, reducing price, build to rent, build to flip, capture some of the growth that's available. I've got lots of connections for finance, lending, hard money, the whole bit. So essentially, that's what's going on. A lot of stuff happening here, guys. So don't wait for the bottom to hit, because it'll actually pass you by. Get involved now. Clearly, you guys know I'm looking for real estate agents. I'm looking for partnerships. I'm looking for investors. I'm looking for people who want to do this business. I'm looking for people who want to jump on my course and learn this. For example, I've got a bunch of buyers down here. I've got people who have taken or in my short sale program. They're getting short sales now, and I've got buyers for them, cash buyers. So they secure a deal. If they don't want it, we can move it, overnight, which is really great. So the industry and the business that I talk about is actually happening right now. So no lies here, guys. All right. So anyway, thank you once again for the views, the likes, and the comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe, and look forward to speaking with you later on this week, and reach out to me. Now is the time. If you've hesitated or waited, now is the time.